Property prices are already on the up, there are more transactions, there are more mortgage approvals, interest rates are coming down, inflation is basically under control, and we've got stability in governments. What is 100% loan to cost lending and how does it work? To start off by explaining this, it's really intended for portfolio landlords or investors that have got a number of assets in the background. It's not something you'll be able to use as a new investor or new developer. You need to have a bit of track record, but as long as there's some equity in the properties, that's where the idea of this 100% loan to cost product comes from. It's essentially taking some of your existing assets as further security for the loan you're looking to achieve. So let's say you've got, I don't know, 10 buy-to-lets that have been sat there for a number of years. They're all on fixed rates because you've been sensible at fixing them. But taking a whole portfolio view and looking at what equity there might be releasable to use as security for another lend is essentially how this cross-collateralisation works. It's not necessarily a fixed charge. It could be a charge. It could also be a debenture over a limited company if your properties are held in one or more limited companies. But it could also be something called an equitable charge. And an equitable charge is kind of written promise. It's like a contractual promise to the lender to be able to use those other investments as security against this loan. Now, if you can imagine a deal where you've got multiple properties all tied up on fixed rates, you don't want to refinance those and pay the early redemption charges, but you want to get at some of that equity in order to use another deal without having to refinance the property or take another loan out or refinance that existing loan on those assets. It's a great way to get a deal through quickly. We've recently done a joint venture with a client where we've been able to use one of our own assets that got valued. We've been able to extract some equity and use that as money to lend on to a joint venture partner. So it's a very creative strategy. I've got a team of brokers behind me that I work with regularly on all of my deals and my clients' deals. I'll do a lot of consultation, a lot of mentoring with developers scaling up their business or buy-to-let investors moving into development. If you'd be interested in that, by the way, there'll be links around this video so that you can connect with me, book a call with one of my team, and then we can jump on a consultation call and I can help you in your own business, not only with introducing you to the right brokers to help you extract some equity, possibly to scale up, to do these no money down deals. No money down is a horrific word, I hate to use it. So what I mean by that is using money that's tied into other properties. So you need to have money, you need to have assets to pull out of it. So it's not a no money down deal. It's a significant amount of risk because you're using another property as that money. So again, this isn't sort of, first time person coming to the industry can do this. This is more for a little bit more of an experienced investor, someone with maybe a handful of properties or existing developers, something where we've got other assets in the background. Could be your own home, it could be other buy-to-let properties. Could possibly even be business assets, depending on the turnover and P&L sheets and cash balances and retained earnings and things like that. But mostly it's for people that have got substantial property, reasonable property assets in the background. And if that is you, and we've helped a number of clients lately with refinances through our, my team of brokers, people I use on a daily basis, financing your own deals, then you might be able to make hay when the sun shines, because the market in the UK is doing extremely well at the moment. There's lots of signs of green growth coming in, little buds of shoots of green like shooting up in the market. Finally, after long-awaited cooling period in the economy, started off with Brexit, things slowing down, then of course the pandemic hit. Then we got into wars, hyperinflation, interest rate rises, and now we've got new governments and Donald Trump and Labour government in the UK. I think that we are going to enter, my personal opinion, a nice period of sustained growth and a bit more stability. And that means there couldn't be a better time to invest in the market now. So if you've got a portfolio that you might want to use as collateral to go and do some more deals now before prices do start shooting up, signs that things are increasing, property prices are already on the up, there are more transactions, there are more mortgage approvals, interest rates are coming down, inflation is basically under control, and we've got stability in governments. There's talk of even the war ending in Russia. So, this is the time to take advantage of the market conditions where prices are still reasonably low, because growth will be coming over the next few years, in my opinion. If you'd like a free portfolio review with myself and my team members, I should say, and introduce you to the right people to help you do that completely free of charge, please use the links around this video and we'll get things going for you and see if there's some value to extract to help you further grow your portfolios and move maybe into more serious development. And indeed, if you'd like to do some consultation or mentoring with me, there'll also be a link around this video. So book a free call and we can have a chat, see if I can help you out in your own journeys. For now, hope you've enjoyed this video. I hope you've learned a little bit more about cross-collateralisation and maybe you hadn't heard that concept before. Maybe you didn't know it was available to you as an experienced landlord, that you can now actually have some pot of gold to go out and do some more deals. Maybe you thought you're all tied up. Hopefully you're not. Let's have a look at it for you and see how you can grow. I'll see you on another video very soon. Take care for now. Bye-bye.